Hello friends, so today we are going to take a look at the best and worst performing companies from the S&P 500 in the last quarter. We should remember that markets are there to serve us and not to tell us what to do. But hopefully we can find some interesting ideas either by looking at some stocks that are trending right now, or what is closer to my way of thinking about investing, by finding good companies that got much cheaper recently because of some short-term problems. Okay, so let's start with the best performing companies in the last quarter. At number 10, we have Hewlett-Packard Enterprises, and in the last quarter, its stock was up by 30.1%. Its PE ratio is just 16, and considering the spike in price, that is very surprising. Return on invested capital is 4.8%, revenue growth is at minus 6.6%, so that is something we really don't like to see, and the dividend yield is 2.4%. At number 9, we have Monolithic Power Systems, and in the last quarter this stock was up by 31.1%. Its PE ratio is 101.2. That means that there are investors that are willing to pay over $100 for every dollar this company earns. Stock markets are sometimes fascinating. Return on invested capital is 16.8%, revenue growth is 22.6%, and the dividend yield is 0.6%. Really nice. At number 8, we have Western Digital, and in the last quarter its stock was up by 34.1%. Its PE ratio is minus 16.7, so they are losing money currently. Return on invested capital is 2.2%, revenue growth is minus 2.2%, not good at all, and this company does not pay any dividends. At number 7, we have Vistra Corporation, and in the last quarter its stock was up by 37.5%. Its PE ratio is 39.4, rather high. Return on invested capital 1.7%, revenue growth is 10.6%, and the dividend yield is 1%. I don't see anything exceptional here, but maybe I'm wrong. At number 6, we have Qualcomm, and we actually analyzed this company recently, so you will find the link to that analysis at the end of this video. And in the last quarter, its stock was up by 38.4%. Its PE ratio is 30.2, return on invested capital is 20.8%, so that is very nice. Revenue growth is 3.7%, and the dividend yield is 1.5%. At number 5, we have Broadcom, and in the last quarter this stock was up by 45.6%. Its PE ratio is 81.7. That is a lot. Return on invested capital is 7.9%, revenue growth is 30.4%, now that is impressive, and the dividend yield is 1.2%. At number 4, we have Teradyne, and in the last quarter its stock was up by 46.6%. Its PE ratio is 55.2, return on invested capital is 19.4%, that's not bad, revenue growth is 6.5%, and the dividend yield is 0.3%. At number 3, we have Nvidia Corporation, and in the last quarter its stock went up by 51.6%. Its PE ratio is 78.3, return on invested capital 22.5%, revenue growth is 30.9%, and the dividend yield is 0.1%. Those results look great, but the price... Well, if you want to learn more about this company, there will be a link to my analysis at the end of this video. At number 2, we have Micron Technology, and in the last quarter, its stock was up by 63.2%. Its PE ratio is minus 45.1, so they are losing a lot of money. Return on invested capital is 15%, and revenue growth is 5.5%. Oh, and the dividend yield is 0.3%. At number 1, we have First Solar Incorporated, and in the last quarter, its stock went up by 77.9%. That is a very impressive growth. Its PE ratio is 27.4, so not that high, at least when we compare it with other companies on this list. Return on invested capital is 4.7%, revenue growth is 0%, and we don't see any dividends either. It does not look too intriguing, but, well, the stock market thinks it is, so maybe I'm wrong. And now let's take a look at the worst performing companies in the last quarter. Maybe we will find some interesting investment ideas that will be worth analyzing. At number 10, we have Paycom Software, and in the last quarter, its stock was down by 25.4%. Its PE ratio is 17.5, return on invested capital is 26.7%, that is very nice, revenue growth is 31.7%, and the dividend yield is 1.1%. I really like those numbers. It may be worth taking a closer look at this company. And at number 9, we have Molson Coors Beverages, and in the last quarter, its stock was down by 26.1%. Its PE ratio is 9.8, so very attractive. Return on invested capital 4.5%, revenue growth is 10.8%, and the dividend yield is 3.5%. At number 8, we have Molina Healthcare, and in the last quarter, its stock was down by 27.1%. Its PE ratio is 16.7, return on invested capital 14.6%, revenue growth is 17.9%, and they are not paying any dividends. Unfortunately, healthcare companies are outside my circle of competence, but that looks decent. At number 7, we have Intel Corporation, and in the last quarter, its stock was down by 27.2%. Its PE ratio is 32.1, so still rather high. Return on invested capital is 15.4%. Revenue growth is just 0.3%, so that is a very slow growth. And the dividend yield is 1.6%. At number 6, we have Dayforce Incorporated, and in the last quarter, its stock was down by 27.6%. Its PE ratio is 149.3. I know I'm old and I'm probably too conservative, but I just don't understand. Why would anyone decide to pay $149 for $1 of earnings? I mean, if you know more about this company and you can explain it to me, I would be more than grateful. Return on invested capital is minus 0.1%, revenue growth is 9%, and no dividend here. At number 5, we have Ulta Beauty, another company we analyzed on this channel. And in the last quarter, its stock was down by 27.7%. Its PE ratio is 14.5, very nice. Return on invested capital is 28.3%, great. Revenue growth is 15.4, that is also decent, and no dividend from them. I may have to take another look at Ulta Beauty after this price drop. At number 4, we have Global Payments, and in the last quarter, its stock went down by 29.8%. Its PE ratio is 18, return on invested capital 3.6%, revenue growth is 15.1%, and the dividend yield is 1.1%. It's all okay, but nothing exceptional. At number 3, we have Globe Life, and in the last quarter its stock was down by 31.8%. Its PE ratio is 7.4, that is very low, return on invested capital 5.1%, revenue growth is 4.5%, and the dividend yield is 1.2%. Actually, all numbers are rather low. At number 2 we have Lululemon, and in the last quarter its stock was down by 33%. That is a lot. Its PE ratio is 24.8, so that is almost exactly the average PE of the S&P 500. Return on invested capital is 25.3%, revenue growth is 19.7%, and the company does not pay any dividends. Lululemon looks interesting. It may be worth taking a closer look at it. At number 1 we have EPAM Systems, and in the last quarter its stock was down by 42.4%. Its PE ratio is 22.9, so still rather high. Return on invested capital 15.8%. Revenue growth is 23.8%, so very nice growth, and they don't pay any dividends. Okay, so let me know in the comments if you would like me to analyze any of those companies in the coming weeks. And if you would like to learn more about Qualcomm or Nvidia, here are my analysis of those companies. Thank you so much for watching, and see you in the next one.